First Solar is getting some love once again from Wall Street as two firms raised their price target and also talked about their positive outlook. Now, before we get into the charts, I do want to get into this article. It is coming from investing.com. So First Solar stock was higher on Monday following the U.S. Department of Commerce announcement on November 29th regarding its preliminary affirmative determination in the anti-dumping duty investigation. Now, the first analyst, Piper Sandler, has responded to these developments by increasing the price target on First Solar to $250 from $210, while maintaining an overweight rating. The firm highlighted that the anti-dumping duties from Southeast Asian countries, which account for more than 70% of the U.S. panel imports, are higher than previously expected. This could be beneficial for First Solar as competing crystalline silicon Tier 1 manufacturer pricing could rise significantly due to the duties. The second analyst on Wall Street, RBC Capital, reiterated an outperform rating and a $315 price target on First Solar. The firm acknowledged that the Commerce Department's preliminary findings on the dumping of solar products from Southeast Asian countries into the U.S. All right, so is this really a technical or fundamental story? Well, let's back up to the monthly chart. And I do want to bring to your attention this huge monthly buy level at $169. That was formed back in May of this past year. You had this rally in price, a basing candle, and then the rally out. Taking out the pivot highs to the left, which was all-time highs once upon a time, as price made its way back down, dipped its toes in the upper portion of the zone near 180, and now it's bouncing higher, right? So the best levels to get long would have been at 180 with a stop at 160, and one would have been up already 1.5x. Nevertheless, I do want to bring your attention to some other levels. This is the weekly chart, and very similar to the monthly chart, we have this rally, basing candle, and then the rally out, again taking out the pivot high to the left. So that was good for at least the bounce until price came down, probably on bearish news, and so this was good for a 3-to-1, and then you had, or would have had, a target at 260. This wick over wick, that implies that there were sellers at that 260 level, and we may see that on the daily chart. So I'm going to take this off, and we're going to drill down to the daily chart. All right. So you had two levels. If you wanted to reduce your risk, you had this first level here, rally, base rally, base rally. That's one level. And then you can take this whole cluster and that gap higher. Wasn't on huge volume, so this was not in as setup, but nevertheless it was a level. And if you take this giant W pattern, what happens? Pretty much price typically retest the apex of that W pattern, and that's what we saw as price came back. Can't make this stuff up. Now, where are we heading next? We do have a level at $225. You have this drop in price, basing candles, and then the drop out. So leg in, basing candles, leg out. And so that becomes the first target. And we're going to label that at about 228. Now, one thing to note, if I scroll out to the weekly chart, this level is in the middle between the two extremes. You got buyers stepping in here, you have sellers stepping in here, and in this middle region, you're going to have equally distributed buyers and sellers, so expect a lot of choppiness. Nevertheless, you can set that as a target. However, the chart suggests the bad news is out, and we can see price move higher over the short term. Thanks for watching. Subscribe. Please like the video.